Tariffs are back, and this time, they're hitting your grocery cart and investments harder than ever. You might not see it yet, but prices are about to shift. Over the next few minutes, I'll break down what's happening, why it matters right now, and how you can stay ahead. On February 1st, sweeping tariffs were enacted, 25% on steel and aluminum from Canada and Mexico, 10% from China. Then came April 2nd, or Liberation Day, when a 10% universal tariff hit most imports, with country-specific surcharges, 34% on China, 25% on autos, steel, and aluminum. Finally, on June 4th, steel and aluminum tariffs doubled to 50%, making this one of the most aggressive trade shifts in a generation. Here's what's hitting your cart. The US depends on imported food, about 32% of vegetables, 55% of fruit, and 94% of seafood comes from outside our borders. Those tariffs affect packaging as well. The AP reported that 50% steel and aluminum tariffs would raise packaging costs, directly impacting items like canned vegetables, soup, and beverages. Overall, grocery inflation rose 2.4% year over year in May, and many household budgets are already strained. Steel's jump to 50% is squeezing packaged goods too, and the higher tariffs could push the price of steel cans up between 9 and 15%. That means a higher bill for anything from soup to pet food to sodas. A survey of 465 CFOs showed that 40% of firms are already passing these costs to customers. Corporate growth forecasts fell from 1.9% to 1.4%, and over 40% of businesses are delaying or canceling investments to weather the uncertainty. Meanwhile, Fed Chair Jerome Powell has warned that tariff-driven inflation could rise to 3 to 3.5% by the end of the year. Retailers are reacting too. Walmart, for example, warned that they will be forced to raise prices on essentials like coffee, bananas, and avocados, all because of rising import tariffs on Chinese and Latin American goods. When a retail giant like Walmart sounds the alarm, that's a clear signal this will ripple through your everyday spending. Looking ahead, some of these country-specific tariff pauses end on July 9th, while China's suspension is scheduled to expire on August 12th. The Fed and Bank of England have warned that this policy uncertainty is putting a drag on economic growth planning. Depending on whether trade talks restart or collapse, we could see even sharper price swings later this year. Here's what you can do now. 1. Budget higher food costs, especially for packaged and imported items. 2. Businesses should consider hedging or locking in supply contracts now. 3. Investors might look more closely at domestic heavy sectors like consumer staples, utilities, and infrastructure. And keep an eye on those key dates, July 9th, August 12th, and any new trade negotiations that could change direction fast. Tariffs aren't just policy. They touch what you eat, how you invest, and the money you save. Now you know what's changing and how to prepare. If you found this helpful, like and subscribe to stay up to date on tariffs, the economy, markets, and how it's all impacting you.